Hello, it's the first annual general meeting for Halcyon Agri, a natural rubber producer that listed on the Singapore Exchange on the 1st of February 2013. And what a year it's been. On the one hand, the stock price has done very well, but on the other hand, you'll find that the price that they get for their natural rubber continues to fall. So we'll look at those in just a few moments. For now, they have operations in Indonesia and Malaysia, and here are some of their customers supplying natural rubber to some of the biggest tire makers, names that you'll be familiar with, names like Continental and Sumitomo Tire. A whole list of them provided here in the annual report. What's interesting, as I mentioned, is the falling price of rubber, and that's broken out here on this page of the chairman's statement. In this paragraph, which you should look up for yourself in the annual report, the chairman talks about the bear spiral, the downward spiral that rubber prices took last year. They were very high initially, but as the year went on, continued to fall. And between last year and 25th of February this year, so just a couple of weeks ago, the price was down almost 70%. So you can imagine that that's going to have a very substantial impact, and one thing that the management will have to talk about at the annual general meeting. Ask them about this if they don't, but I'm sure they will, because that decline in rubber prices has already meant, in their own words, that some smaller producers in Indonesia have already curtailed production. For them, it seemingly is not economical to be producing that much rubber when prices are so low. But here's a second breakout from the chairman's statement, reflecting on the rising share price. And you can see that very clearly in this paragraph, where he talks about the 3 share placements that they've undertaken since listing on the 1st of February. After all, that's why companies list on the market. They're there to get more capital. And they did that 3 times. Interestingly, they issued 40 million shares each time, but they got very different prices on each occasion. In the first instance, it was around 36 cents. In the second, around 50, and on the third occasion, still 40 million shares, but they got a lot more money for those shares because the capital raising took place at more than 70 cents per share, or around double what they raised capital at the first time. So that rising share price has certainly helped them. Still the same number of shares issued, but they've gotten a lot more money for those shares. Now, let's take a look at some other parts of the financial statement and zoom back into those falling prices I've mentioned. What you're seeing on this bar chart, broken out from the annual report, is the increase in sales volume. So you can see a very clear upward trend as the tonnages have increased. But at the same time, the revenue has fallen. And that's, as I mentioned, because of the falling price of rubber. When you then translate that revenue in millions into revenue per ton, you can see once again that there has been a decline from almost $5,000 in the 2011 financial year to around $2,600, so just over half in the financial year under review. When you then measure that up to profitability, you can see it's a little bit more varied than that. Profit actually increased in 2012, but has since fallen away. Part of the reason was certainly the falling rubber price, but also the increase in costs that they incurred because, again, they made those acquisitions. They have to spend money on running those assets, so naturally profit would have declined. You can ask management about that at the annual general meeting, how they are now managing their costs to navigate these choppy waters with the volatile rubber price currently at its lower end of the recent range. The financials are broken out in this financial snapshot, which you will also find in the annual report. We always like to look at cash flow because that really shows whether the company is generating sufficient cash to keep the shop going, to keep the operations going, to keep the lights on, as it were. And looking at the net cash from operations, again, the screen capture here from the annual report shows you that they are still generating cash, in fact, more than they did last year. The cash balance overall is seen on this page, and here it is, with around $53 million in cash on the balance sheet, even once you take away some fixed deposits that they've pledged to banks. The chairman's statement, we're always on the lookout for outlook commentary. How is the current year shaping up? What will the next year look like? Very important to look at because obviously as an investor, you want to know whether you should keep holding their shares, right? Well, the chairman's statement didn't give anything specific about how the current year is tracking in terms of financials, but he does point out that they have achieved certain milestones ahead of schedule, and really now it's about maximizing the potential of the assets that they have. He also hints at the prospect of more acquisitions, which could be the reason why you as shareholders will be asked to vote on this particular resolution. It is to allow the board or the management at least, to issue the same number of shares again. In other words, raise capital for further acquisitions. But not just 20 or 50%, they're asking shareholders to authorize them to issue, as I mentioned, the same number of shares again, 100% increase in the capital that they have currently issued. You'll also be asked to approve a 1 cent per share dividend. So one of the questions that you might like to ask is, why pay a dividend at a time that you're looking to raise more cash? Why not just use the cash that you have in order to fund further acquisitions? So one of the questions that you might like to ask. Now let's take a look at other parts of the annual report, and we turn our attention to the corporate governance statement. The fact that Robert Mayer is both the executive chairman and the chief executive officer means that there is no separation of these roles, as the Securities Investors Association recommends. Ideally, two separate people will hold these two separate roles. In this case, as I mentioned, Robert Mayer is both executive chairman and chief executive, although the company points out in this paragraph, broken out from the annual report, that they have the sufficient number of independent directors on the board to allow this situation to continue. In other words, the checks and balances that should be in place on the board are in fact in place because of the independent directors that they have. Robert Mayer is also the top paid member of the board. You can see that on this page over here. And zooming in, it shows you that he is the only one who earns up to $1 million a year, a third of that in variable bonus, with the other executives earning anywhere up to $250,000, $500,000, or $750,000 a year. So that's the board of directors. There's a similar page showing you how much the key management personnel earn, and here it is. Now what this page shows you is that the top paid manager, also earning up to $1 million a year, is the chief commercial officer, Andrew Trevitt, and about 1/3, 31% of that $1 million, or up to $1 million, is paid to him in the form of a variable bonus. Also cast your eye at the last name on that list. The person here is the chief commercial officer for their Palembang operations, the director of operations to be precise, Leonard Beshiza. He earns up to $750,000 a year, of which again about 1/3 takes the form of an annual variable bonus. And these two names, Andrew and Levitt, are in fact, Andrew Trevitt I should say, and Leonard Beshizo, are also featured here on the top shareholder list. Here is the page, and when we zoom in, Andrew Trevitt holds the number 6 position, and Leonard Beshiza the number 7 position. They both own between 4 and 5% of the company. So even though they're not listed on the board, certainly not in the top payment of the board, they are listed in the top management as well as the top shareholder lists. Go up to them and say hello if you see them at the annual general meeting. One last graphic to show you from the annual report, and here it is. This is the breakout of where their initial public offering funds, the proceeds from their IPO, have gone. Now remember, they've issued shares 3 times since listing, so they've managed to bring in a lot more cash since their IPO. But in terms of IPO funds, they still have about $900,000 left. And as I mentioned, the capital raisings are not likely to end here, with further share placement seemingly in the offing after the annual general meeting. So that's a quick review of the annual report of Halcyon Agri. You should of course read the annual report yourself if you're going along to the annual general meeting, which is going to be held on the 23rd of April at the RELC International Hotel in Orange Grove Road.